So why is Donald Trump focusing on Bitcoin and being such an advocate for the crypto market? Right now, the United States national debt is climbing nearly $3 million per minute. In the time it takes to watch this video right now, we're going to have added over $45 million to the national debt. And that's not just a number on a government website, everybody. That's a warning. It's tied directly to your savings, your retirement, and your financial future, and you just don't even know it. We're living through one of the most significant monetary shifts in our lifetime. And while most people are watching the headlines, a small group of investors are watching the opportunity. They understand something critical. This isn't just a crisis. It's a massive wealth transfer. And they're not just holding gold coins and bars like this or burying cash in the backyard. They're using a dying currency to build income-producing real estate portfolios at scale. Let me show you how they're doing it. All right, let me give you a history lesson real quick. In 1971, the United States, Nixon took us off the gold standard. At that point, the US dollar as we knew it was simply a fiat, as good as the paper it was written on. No longer were we backed by this. This is real gold, okay? This is real gold coins, and I got lots of them, okay? And we have them in a safe next to a gun. You have to realize what's happened. Now that we've been a fiat for over 50 years now, most world reserve currencies don't last more than 40 to 50 years. I think we're around 53 to 54 right now with the US dollar. Pay attention to what's happening. During COVID, what happened? China created the digital yuan. The US created the digital dollar. Coincidentally, the ship is too far out to sea. Even Donald Trump knows this now here coming into his second term, and he can't turn the ship around. It's not his fault. It's everybody's fault. It's all Republicans, Democrats, up, down, left, right's fault as to why we're in the situation. But it's going to shift. Do you know what BRICS is? We're going to talk about that in a few minutes. BRICS, BRICS, mainly pushed by China. Okay, but we're going to get into that in a second. A lot of things are shifting, and it's very, very important that you understand that if you want to protect yourself and your family, there's a few things you can do, and I'm going to go through them right now. The warning signs are clear. The foundation of the American economy, the US dollar, is showing real strain. We've crossed the 36 trillion and counting debt level. That's over $100,000 per person in the United States. The government's solution? Print more. And every time they do, that dollar that's in your hand loses value in your bank account as well. That's inflation. The hidden taxes no one votes for, but we all pay for. Meanwhile, the global demand for the dollar is eroding. Nations, like I said, China, Russia, and the BRICS alliance are building systems to trade without the US dollar. They're tired of the volatility, tired of relying on a single debt-heavy currency. And back home, markets are showing stress, rising interest rates, credit tightening, investors' uncertainty. It's not isolated, it's systemic. These are the tremors before a shift. The question isn't if something breaks, it's who's positioned when it does. Do you have tangible assets like this? Or are you sitting in the bank account? What history tells us is this, the Hugo Stein's playbook. If you think this is all theoretical, look at the history. After World War I, Germany faced the same problem, debt, money, printing, and hyperinflation. In 1923, prices exploded. A loaf of bread went from 250 marks to 200 billion. Life savings were wiped out. Currency became worthless paper, but not for everyone. Enter Hugo Stein's, a German industrialist who saw what others missed. He borrowed aggressively. In the weakening of that currency, then he acquired real estate assets, tangible assets, right? Bullion. When inflation wiped out all the others' debt, the assets remained. It appreciated. He didn't just protect himself, he became one of the wealthiest men in the world. This isn't a story about the past, it's a case study. What's possible when you understand how money works during a crisis. Debt is a good thing if it's good debt. The strategic playbook of 2025 and beyond. Here's how modern investors are applying the same framework today, right now as we speak. Exit cash, enter the hard assets. Every dollar in your account is losing buying power. Do not keep any more than 6 months of fiat cash, actual cash, in your bank account. Real estate, that's tangible. Finite, as materials, labor, and inflation rise, the replacement costs of those go up. And so does the value of existing property. Small investors are reallocating capital from paper into income-producing properties. Number 2, use the long-term debt to your advantage. Fixed-rate debt. Inflation doesn't just erode savings, it erodes your debt. A 30-year fixed-rate mortgage today gets paid off with weaker dollars tomorrow. Meanwhile, your rents on your property values tend to go up over time. That's leveraging used strategically. Number 3, I want you to focus on cash flowing assets. Look, appreciation's great, but in turbulent times, cash flow is king. Multifamily properties with solid occupancy gives you income tracks with inflation. That cash flow provides resilience, even in downturns. Number 4, diversify geographic risks. The U.S. isn't going away. But some markets may feel more pain than others. Savvy investors are diversifying across the region, some even internationally, looking for stable governance, strong rental demand, and favorable laws. Number 5, try and stay liquid. Stay ready. Turbulence creates opportunities, but if you're just trying to tread water, it's going to be tough. I get it. If you don't have all the capital, connect with people that do. Over-leveraged owners may be forced to sell. Those who are prepared with liquidity and lender relationships can step in and acquire discounted assets. You don't win by predicting the crash. You win by being ready when it happens. You always buy when there's blood in the street, even if it's your blood. So look, you don't need to panic, but you do need to prepare intelligently. If this video helped clarify some things for you and what's happening and what to do about it, do me a favor, subscribe, like, comment, and share this video so it gets out to more people so they can see it on YouTube. We're breaking down real estate strategies that work in the real world, whether the dollar holds or not. And if you're already taking action, drop a comment below. Would love to know what you're doing. What signs are you seeing? What are you doing to hedge your growth? Is it tangible? I mean, these are literally gold coins. I got about $25,000, $30,000 just in gold coins in my hand because of what's happened to gold over this last year. It's more than doubled in value. The shrinking global dollar, persistent inflation. This is not a business as usual. This is a true realignment of the financial powers. And history tells us wealth does not vanish, it moves. Remember that. The smart money's moving out of cash and into assets. Hedging inflation. They can become leveraged and they can be traded in any currency. Multifamily real estate sits at the center of that. You don't need to predict the next collapse. You just need to be ready with tangible assets. You just need a playbook built to withstand it and thrive in it. This is Justin Brennan. You have just been schooled in multifamily. Take care. We'll chat soon.